historical like Bitcoin bottoms don't necessarily occur because you have like a large amount of buyers that step in. It's more of just the fact that like sellers run out of coins. And so a lot of the forced selling that we described a second ago, including like 2 capitulatory mining periods, at the end of 2 capitulatory mining periods, miners really don't have any substantial amount of coins left to sell at that point. And so, yeah, I think that kind of drove this initial move.
Hey everybody, welcome back to the Blockware Intelligence Podcast. This week I have on a special returning guest, Will. What's going on?
What's up, buddy? Great to see you, Joe. Hope you're doing well, man. I know you're wearing that shirt with pride.
Exactly. Yeah, you're just talking about how Georgia back-to-back national champions now. But we want to hear about you. What have you been up to since, you were the original founder, I guess, of the Blockware Intelligence Podcast. What have you been up to since you left?
Sure, yeah. I mean, first of all, it was an honor working with you and also Mitch as well, who kind of came in the back half of when we launched. But, yeah, man, it was a thrill building out Blockware Intelligence, and, very proud of my time there and what we built. What I would say is one of the leading, free newsletters in the industry, and also one of the better podcasts out there for sure. You guys have upped some of the production quality and stuff like that since I left, so kudos to you. Yeah, man. I mean, I'm very excited to see that the intelligence arm is in good hands with you, and you've been crushing it. Hosting the pods. I've been pretty tight on having free time with starting a new business, but like in my free time, I've definitely gotten a chance to listen to 2 or 3 of the episodes that you've done. So kudos to you for crushing it. Yeah, since I left, was it September, like the beginning of September, left Blockware. Pomp and I launched Reflexivity Research. Basically the goal there was, we just felt like it was a very advantageous time to utilize some of the personal brands and distribution channels that we had built out over the last few years. Pomp and I have known each other for like 3 years now. And, I've always kind of had a good relationship, and, we kind of had this win-win relationship set up where, of course, like, we had a personal relationship offline, but just, from a like content standpoint, we go on Pomp's show every week. And if you remember, we used to do like the weekly Bitcoin market breakdowns in the back half of 2021. And, we were just talking one day and we said, hey, look, man, why don't we start a research firm? And I think kind of the core ethos of that was, we really wanted to help kind of bridge traditional finance into the, Bitcoin and the broader digital asset space. I think there's a lot of jargon and word salad and, confusing, language that's in the broader digital asset space. And, a lot of that can confuse newcomers. And, that's just a byproduct of like anything that's new. Just the same way when the internet first came around, I'm sure. And of course, like that opens up the door for a lot of misinformation and confusion amongst those new market participants that are entering this new technological subsector, right? And so that was kind of the goal of launching Reflexivity, is kind of serving as the bridge of informational services to bring these traditional firms into Bitcoin and the broader digital asset space. Since launching, we've brought on 4 other guys, three other analysts. 2 of them are both in college. 2 of them I actually found they're pseudonymous, right? So like I didn't even know who they were or what they look like, or honestly I didn't even know their background when we brought them on. All I knew is that these guys had really great content, and in the same way that like the 2 of us both did, but just like just speaking for myself solely, like I built out a personal brand through Twitter and, just posting my ideas, while I was working at Target, and, didn't have any like financials, background or anything like that. Didn't even finish college, right? If we're putting it all out in the open, right? And so like with that being said, like when I went to hire some of these guys, it was like, why am I going to say, okay, you need to have these type of qualifications, right? It's the same way that Pomp found me. And then you built a name for yourself, Joe, is putting out information, and that speaks for yourself. And so that was kind of the approach I took to finding talent, and couldn't have been happier with the results so far. We've got 3 guys on the team again. One of them, he goes by Fijiao on Twitter. He's a macro analyst. He's had some pretty, I'm not going to lie, he's had some pretty godly calls, but he's one of the best macro analysts that I know for sure, and we're blessed to have him on the team. And then also another synonymous guy named Knower. He goes on Twitter by Knower of Markets. He's pretty well known on crypto Twitter, actually. He's got like over 40K on Twitter. But he's an absolute DeFi wizard. He knows, more about that than I can even wrap my head around. And then finally we have another guy named Seth Steinman, who used to work at another digital asset hedge fund. The team that we've put together is very young guys, but super brilliant, and they each kind of have their own cadence. And, I would say try to really strategically pick people that are strong where I'm weak. Whereas of course, I kind of focus on primarily a lot of the Bitcoin analysis, things around, of course, there's the on-chain stuff, but also, following Bitcoin miners, kind of fundamental developments, VC investment in Bitcoin. I also dabble in, some DeFi stuff. Recently did a report on decentralized exchanges, for example. But definitely, I would say I've kind of focused primarily on the BTC stuff, and then the other guys kind of have their own cadence. And with that, it's been really cool to build up a team of super young, obsessed people in the same way that we are, and I'm very excited with the team that we've built out.
Yeah, I feel like you guys are doing some really awesome stuff over at Reflexivity. And yeah, I feel like ever since you started in the Bitcoin industry, you always did a great job of boiling down very complex topics into tweets or content or research reports that anyone can understand, whether you're from traditional finance, whether you're crypto native, or whether you're new. That's what I think you've done really well, and your new firm does really well. So yeah, great job there. I do kind of want to talk about, we are recording this on Wednesday, and there was just a FOMC meeting, and where the Fed basically raised interest rates by a 0.25 percentage point, and then they signaled that they are likely going to hike again in March. Take this, however you want, but what are your thoughts generally from a macro perspective of kind of what's going on in relation to Bitcoin, maybe?
Yeah, sure. I would definitely, again, relay to our macro analyst, Fijiao, for all the macro insights. But from, my surface level perspective, and, don't want to do too much macro LARPing, I would say, look, I think, we're past the kind of velocity of rate hike increases. Maybe we get one more 25 basis point hike in March, kind of TBD on that. But, I think it wasn't any surprise that they raised 25 bits today. That's exactly what Powell said they were going to do. The question is just really how long are they going to hold interest rates where they are, and how much damage do they need to see done into the economy to feel like they can kind of ease off the gas, right? And so I think starting to see over the last month or two some of these larger, especially in tech firms, starting to undergo some pretty significant layoffs. Of course, some of these crypto native companies like Coinbase and Kraken, but then also you've got the Amazons of the world, the Microsofts of the world, the Metas of the world that have started to conduct some pretty sizable layoffs, and Google as well. So that's one thing that continue to watch. And then in terms of affecting markets directly, what I would say to continue to watch is the net liquidity conditions. So something that Felix, our macro guy, continues to put in our macro reports and forward guidance is to consider something called net liquidity, which looks at M2 money supply, reverse repo facilities, right? So kind of short-term lending for banks with the Fed, and then also the Treasury General account. And so as we've approached kind of this debt ceiling, the Treasury is issuing short-term T-bills, which is going to incentivize people to move out of the reverse repo facility and into T-bills, because of course when you issue more, the yield goes up, right? So as bonds sell off, the yield goes up, which incentivizes people to come out of the short-term reverse repo facility and into short-term T-bills, which is net positive for liquidity conditions. So that combined with just the fact that we have seen some resilience in the economy. And we are kind of past the kind of terminal, not terminal, the velocity of rate hikes that I spoke about in terms of the rate of increase. it does seem like, and seems like it's been a pretty consensus view at this point across the board with many of the kind of like macro thinkers, is just the idea that we're in this Goldilocks period for perhaps a few months, and then maybe we start to see the real effects of, these rate hikes really kick in into the back of the year. Again, that's not really, I would say, like my realm of expertise per se that I focus on. I would say from like a, like Bitcoin or crypto native perspective, I think just the kind of, big picture here is that you had the largest forced selling, period in Bitcoin's history take place over the last 6 to 8 months, from basically every major centralized counterparty in the entire space blowing up. Of course, with the largest, known one being FTX. We could, rehash, but I think everyone probably knows the, every single blow up that took place, from Celsius to Voyager to BlockFi to Three Arrows. We could go on and on and on. But I think a lot of that forced selling had taken place into the back half of the year. You had a lot of kind of, tax loss harvesting at the back half of the year. And then the last one, which I've seen you guys actually talking about in the Blockware Intelligence newsletters, is also miners as well, right? We had kind of this double dip capitulatory period that took place in 2022. The first one took place in June, and then the second one in the back half of the year. I think Core Scientific initially sold over 7,200 BTC in June of last year, which was kind of in that first wave. We also saw some, pretty substantial decline in things like the miner net position change metric that we both look at to track miner wallets. We saw a pretty aggressive bounce back in hash rate, and then another decline in hash rate that was significant enough to trigger that hash ribbons cross that we both look at to determine the capitulatory periods. And with that, we saw some real substantial selling from the like on-chain wallet movements for miners, and also saw, like miners moving coins to exchanges as well as confluence with that. So after about, a month and a half of that, we finally have seen that kind of net position change flip green again. Also have seen hash rate move back to new all-time highs, which, just to kind of illustrate like the rate of increase, is the strongest 30-day net change in hash rate ever, which of course you have to adjust that over time because, as hash rate scales up, you're getting the recency bias in terms of the sizing of the total amount of hash rate. But in terms of recent years, on like a relative basis, it's the largest 30-day increase in hash rate ever, which just illustrates like how aggressively rigs have come back online recently. Some of that is, energy prices have continued to decline over the last few months, which is a net positive for miners, especially the ones that don't have fixed energy contracts. And then also, in addition to that, obviously we've seen the most obvious thing, which is Bitcoin's price rising, which everybody loves, and has marginally been a good thing for miners and taken some of the pressure off of their margins. So those are some of the things that, from like a Bitcoin crypto native perspective, I would say have been driving a lot of the moves over the last few months. Last really, well, I'd say month and a half really. And then on top of that, like on the altcoin side, just a lot of these like kind of low float tokens that had certain large unlocks. There's like two examples that come to mind for this that have been heavily shorted, have been like just absolutely ripping. So first of all, a couple of the berry coins. So things like Decentraland and Gala, which I have no position in and have no real opinion on, just the fact that like a lot of people were super short those coins because there was kind of this narrative that DCG was going to have to capitulate all of their assets like immediately, and we can maybe talk about DCG, but I think that's probably going to take longer to play out than like people expect. It's not like DCG is going to liquidate everything in a week. It'll probably be a pretty like lengthy, drawn out process in terms of like the entire restructuring of whatever's going to take place. But yeah, I mean, we saw an aggressive short squeeze on those assets, and then also Aptos was like kind of the biggest one. If you go on like CoinMarketCap and look at the top performers over the last 30 days, Aptos has been by far the top performer. And it's not that there's like anything fundamental that happened with Aptos. It's just that it's such a new coin that there's just such a low amount of float that's actually circulating because none of the unlocks have triggered yet. And then everyone got super short Aptos because everyone's like, there's nothing built on this yet. And so, I think kind of the dynamic that was taking place there was just simply the fact that there's probably some large buyers that just saw that, the float was super low. There were a ton of shorts and just decided, all right, let's squeeze these guys. This thing ripped from like $3 to $17, which again, I don't think really has a fundamental underlying reason why, it should be a multi-billion-dollar layer one. But yeah, I think that explains a lot of the price action that we've seen kind of across the board. I think just in general, like from a behavioral standpoint, it's funny you have that chart that everyone looks at. It's like the behavioral cycle of markets, and it's like disbelief. You get excited at the top, euphoria, complacency, anxiety, denial, and then anger, depression. I mean, I thought from a behavioral standpoint, I posted this on Twitter in the middle of December when we were trading like 16K. I was like, we're somewhere between like anger and capitulation and anger or depression in that chart. And that was just reflected of like, it's funny in that it literally says in that chart when you look at the depression phase, it's why didn't the government prevent this from happening? It's funny, like during that time period. Well, not funny because people lost a lot of money, but ironic. Like you saw people literally posting like, why didn't the SEC prevent this from happening? It's like this is like literally like a textbook, like word for word, what this like meme, like schematic for how the market plays out from like a psychological perspective. So. Now I feel like maybe we're kind of in this like disbelief period where I'm not saying that I think we'll head back straight to all-time highs, but like I would say kind of like my base case for 2023 is probably like this reaccumulation period, which probably has like a lot of chop in it and obviously like still a lot of macro overhang. But I think it's probably like a choppy period with like an upwards drift. Like I would gauge that probably end the year like a little higher than we are now. But I don't think we're heading straight to all-time highs in a few months. It'll probably be a choppy way along the road. I think like similar to kind of like just as like a general like mental schematic to have. Like I think fractals can be useful to use, but like not like on a literal like day-to-day basis of like mapping out the fractal, but just as like a super like general outline for your thinking. I think like the 2019 time period is pretty similar to like kind of what expectations could be for this year, just given the idea of you had a ton of forced sellers end of 2018, ton of forced sellers at the end of 2022. People gave up, left the space, even like hardcore OG long-term holders. I mean, we saw it was interesting. We saw like a lot of just on-chain. I mean, of course, you had like some people on Twitter like saying like I'm rage quitting the entire space that had been in the space for a while. But just like on chain, you could see there were, a couple very large like old coins that got moved, old wallets that were moving. So I think just from a kind of like schematic, I think 2019 could be pretty analogous to this year, which of course we saw this like very large short squeeze, which basically like what happens is like the market becomes so conditioned to expect a certain type of behavior that once that behavior reverts, they're so conditioned to that certain regime that they expect the continuation of that specific regime, and that allows the switch into the new regime to be more aggressive. And like from a derivative standpoint, like that's very visible. Funding slipped positive now. But funding was pretty negative over the last month or so heading into this move. And I would say like the inverse of that was like spring of 2021, right, where funding was like some crazy annualized rate, like 150% across the board. And people were basically becoming like psychologically conditioned to leverage long all these shit coins on every single dip, right? And so what happens is like the longer that regime and the more aggressive the regime, what's really happening from like a psychological perspective is like you're conditioning the market participants to feel more and more comfortable with this behavior, right? And so like once you finally switch out of that regime of leverage longing every dip is going to work, and you have the May 19th candle that comes along and Bitcoin drops from whatever 50 to 30K and alts are down like 60% in a day, the switch out of that regime into that like summer reaccumulation period that we were in 2021, that kind of switch over was really aggressive and devastating because people had become like so psychologically conditioned. And so like to apply that to like the last few months, I think people have become so psychologically conditioned, and like I'm not saying that this isn't rightfully so, to expect like continued fallout, more shoes to drop, right? And so especially after FTX, like a lot of market participants just kind of felt paralyzed of like, first of all, there's no liquidity, right? Because all the market makers are like, I can't trust any of these counterparties. And you can see that in like the order book depth. This I forget the name of the data provider. It's like KAIKO. They look at like order book depth, and they have like some great charts that they put out, and they call it the Alameda gap. If you look like the +2, -2% spread in like bid ask depth. So basically, like how much money does it take to move the price up 2%, and how much would you have to sell to move the price down 2%? Liquidity by that measure has just completely dropped off over the last few months, and people have been calling it the Alameda gap. So like large players have been paralyzed just from the fact, first of all, that there's no liquidity, but also it's like, okay, like can I trust any of these counterparties? Like what's the next shoe that's gonna drop? And so with that, I think you've had a lot of money that kind of stepped out, pulled off on the sideline, and what happens is once you have no more forced sellers, I would say like historical like Bitcoin bottoms don't necessarily occur because you have like a large amount of buyers that step in. It's more of just the fact that like sellers run out of coins, and so a lot of the forced selling that we described a second ago, including like 2 capitulatory mining periods, at the end of 2 capitulatory mining periods, miners really don't have any substantial amount of coins left to sell at that point. And so, yeah, I think that kind of drove this initial move. I think what I'm watching for now, there's definitely, by certain measures, like if you look at a ratio of like stablecoin market caps to like Bitcoin's market cap, or like the aggregated crypto market cap, you could see that there's still a relatively large amount of dry powder to the size of the liquid assets that they're being deployed into. But another thing that I think is more important to watch is funding rates. In 2019, what led Bitcoin from 3K to 14K was that on every single move up, you had this consolidation, and then during that period, a bunch of shorts piled in. And so basically what happened is like on every single push up, you had this consolidatory period, and then a bunch of shorts piled in, and then it legged up again and squeezed all those shorts. And then more shorts piled in after that because they're like, all right, that was the blow off top. No, okay, moves up from 6K to 9K. Okay, that was the blow off top. And then finally at 14K, people stop shorting, and then you finally have those traders like either run out of dry powder to short, or they finally are like, okay, this is the new bull market, and then that's what the market turned around. So that's one thing I'm watching in funding rates, is to like gauge that similar behavior from traders. It's like if and funding rates currently, just to note, like are moderately positive, which isn't like a great thing for the 2019 like fractal to continue playing out. But what we really want to see is a bit of a consolidation period with like pretty hefty, or at least mildly negative funding rates, and obviously like open interest as well, indicating that like shorts are coming in, and then that could be fuel up for another leg up. That's exactly what we've been seeing in Aptos, which I mentioned a second ago. Not that like the specific like project matters, but just the fact of like you had this dynamic where every time it legged up another 40%, shorts piled in because they're like, okay, this thing really doesn't have any real utility built on top of it. There's no DeFi activity on top of it. There's no NFTs on top of it. And I know like Bitcoiners like don't really care about those things, but my point is just that like there's literally nothing on this project, right? It just launched, and so like logically, these traders are like, okay, well, let me short this thing into the ground. It just legged up 60% for no reason, but continued to squeeze those traders until there were no longer like new shorts piling in. And also you saw the Aptos Foundation has sold off like $100 million of tokens, which of course you don't want to see. It's funny, like you see a similar thing with ETH, right? Where like the ETH Foundation is like pretty godly with their timing with like when they sell. Like they've sold the last like 2 or 3 like Pico tops, dude. And it's like every time everyone's like, yeah, like they're just distributing some coins. So like it's definitely something to watch for. Like when the foundation starts like dumping supply, then that's probably a pretty decent red flag.
Yeah, I had not ever heard of Aptos, but it reminded me of kind of GameStop. Like it was so bad, it was kind of good that shorts piled in, and that's kind of funneled up the bull run, I guess, or at least the price movement upwards.
Yeah,
But yeah, it's interesting.
it's funny, like you have like this like socialized coordinated effort now, like in markets, and like that's not something that existed like 10, 15 years ago. It's like, it doesn't really matter. Like, I think one thing that could maybe like, and like I guess I can only speak for myself, definitely confused me when I first got into markets, is like the movement of certain assets when there's like no fundamental like underlying reason for them to move a certain way. But like as a trader, and like I don't trade as much because like I'm busy building out this company, and also like I just don't think like the market conditions are like very conducive for like short-term trading anyway, at least for me personally. But what's more important to watch is like the positioning around an asset than necessarily like the asset itself for like short-term price movements. And so yeah, like these like socialized, like trade efforts and things like GameStop and AMC, it's like the same thing that took place with Aptos. Is basically like if you looked at like the Korean premium, like Aptos was like pretty clearly getting bid by Korea. And you had these shorts that continued to pile in, and I think retail saw that and took advantage of them and kind of rinsed a lot of these guys. And maybe some of them were simply just like hedging their locked positions. Like a lot of these guys have they're up multiples and multiples over on their initial like seed allocation into Aptos, and so like they'll try to short perps to like hedge that out to lock in their gains. But yeah, it looks like a lot of people got rinsed over the last month or so.
Here's a quick message from our sponsor. Being involved in Bitcoin means you value freedom. Financial freedom, freedom to save, and freedom to spend. Privacy, digital security, and no internet tracking logs are critical in the information age today. NordVPN is my favorite VPN service. It's fast, secure, and offers 5,500 secure servers in 59 countries. You can connect to any one of them and enjoy your favorite content no matter where you are. They've also doubled down on keeping you safe with their new threat protection feature. Say goodbye to intrusive website ads and malware. Even if you download an infected file, threat protection kicks in and deletes it before it makes a mess of your computer. The best part about this sponsorship, there's literally no risk with their 30-day money-back guarantee. Give it a try, and if you like it, great. If you don't, they'll issue a refund and you can pretend the entire situation never even happened. Check out our link, nordvpn.com/blockware, to get your subscription started today.
Yeah, I really liked your 2019 analogy. I thought that was good because I'm of the same opinion, I guess, that I think, bearing no macro meltdown, Bitcoin's probably going to go like sideways / up this year, if I had to guess. But it is interesting because a lot of people, your points of like shorts would pile in, and that would be the next leg up for Bitcoin in 2019. I've also heard other people describe it as like the plus token Ponzi was like sucking up coins. I don't know do you buy into that idea at all or not really? I always had I'm sure it like had some effect as to like pumping Bitcoin as it was just kind of sucking up Bitcoin supply.
Yeah.
But also like I feel like a lot of times markets like find narratives and then just attach to it and may not be 100% correct. What are your thoughts?
Yeah, I think that's right. It's something I've like talked about with David Puello a fair amount. Ergo BTC has done some really good work on this. He was like kind of the one that kind of like exposed the whole plus token thing and like how large it actually was. It definitely like influenced the underlying spot bid in 2019. But yeah, I think like the primary driver was just like shorts continue to pile in. One thing, like I feel like I've been rambling like a fair amount on this, but like one thing I'd like to ask you, Joe, is working still for a Bitcoin mining company, and I know you have a different position now, but like you used to be our mining analyst, and I know you follow that obviously very closely. What do you think has been driving a lot of the hash rate over the last, honestly, like 6 months? Even though we saw that kind of second decline, I mean, still it's been absolutely ripping the last few weeks, and still has generally like been trending upwards for the last like 6 to 8 months. It's just kind of baffled me because even though again energy prices, as we talked about earlier, like are down from like the middle of 2022, they're still higher than the beginning of 2022. And then on top of that, even though Bitcoin is down like 67% instead of 76% right now, it's still down 70 or 67%. So, you have the two main components of being a successful Bitcoin miner that are like pretty strongly against, someone favorably stepping back in and mining. And then obviously the third one being the fact that hash rate is at all-time highs. So like the competition to mine is at all-time highs in addition to those other two factors. Do you think it's just been like some very like large energy producers that are kind of dipping their toes in the water? That's been kind of my thesis. I don't know. But if we go back to like mid 2022, I think it was Exxon announced that they had launched like a pilot program with I forget the entity that they were working with, but they basically were kind of like experimenting with Bitcoin mining and flared gas. What do you think has been, or is it just the fact that like a lot of these rigs were financed on debt, and so they've been like quote unquote inorganically like plugged into what we're used to in other Bitcoin cycles?
Yeah, no, it's an interesting question. I feel like a lot of people have been confused by it, certainly. And yeah, like, Exxon is one of the energy companies that's dipping their toe in the Bitcoin mining industry. ConocoPhillips, Shell sponsoring the Bitcoin conference. So yeah, the energy industry is definitely like inching closer and closer to the Bitcoin mining industry. By no means would I say like they're, 100% all in on Bitcoin mining. Obviously, it's definitely not true. There's a long ways to go. But they are inching closer. I wouldn't necessarily say that's like the main reason hash rate is going up. I think a lot of it is probably just because, yes, so many things have gone wrong in the mining industry. I mean, like you said, difficulty has gone up, energy prices are high, Bitcoin price is down. So it's like the trifecta of every possible thing that could go wrong. But with that said, it's still profitable to mine Bitcoin, right? Like if you have, commercial.
Your energy cost is zero. Who gives a shit?
Yeah, exactly. If your energy costs are zero, you can mine Bitcoin at $0. So that's pretty good, right? And then also you got to consider like, okay, summer of 2021, we saw Bitmain release their XP, which is like the flagship, most efficient machine. It runs like 140 terahash. So if people are simply like unplugging, S17s and S9s that are just not profitable at like almost any electricity rate, and they're plugging in the new XP, I mean, that's like a multiple jump in hash rate just right there. So I think
it's funny you said that. Like Checkmate replied to, I posted like a chart of hash rate like 2 days ago and like the 30-day change in it. And he replied, I didn't even know Glassnode had this, but like a breakdown of like the makeup of hash rate by machines. And it was like, his point was basically the fact that like, it was mostly newer gen machines that have been doing the plugging in over the last 6 months, and therefore, even though hash rate is at an all-time high, the amount of power that's being expended to achieve that level of hash rate isn't at all-time high. So, like, the efficiency of miners is technically like an all-time high for the sake of that point.
Yeah, exactly. That was a great point. Yeah, I mean, the people are literally like as the hardware becomes more efficient, you can use less energy, produce more hashes, and that's going to make hash rate go up. It doesn't necessarily mean like the mining industry is exploding especially over the past year. Obviously, it hasn't. Of course, if Bitcoin runs up a bunch, then the mining industry will be exploding yet again. But yeah, I think that's well said. Great points.
Yes.
Unfortunately, I do have to drop early for this, but I want to ask you at least one more question.
Sure. So I know I rambled for like 3/4 of this, so I figured we just kind of shoot the shit.
Yeah, for sure. No, it was been good for sure. I'm curious, you are like young in the space, just like me. What have you learned since like working full time in the space? Like you dropped out of college, you worked at Blockware for a little bit. Now you started your own firm. Like, what have you learned since you started this whole progress?
Oh, a lot of things, man. A lot of things. I would say one of the biggest ones is like you have to believe in yourself before anyone else is gonna believe in you. To some extent, like believing in yourself is like half of the battle, and like you decide who you want to be. Like, not to be corny, but like I love the book Think and Grow Rich, right? And the whole idea, like not the whole idea, but like one of the main points in that book, it's broken down into like I think like 9 like subtopics of like achieving this like general idea. But one of the biggest takeaways for me is just this concept that like you kind of decide who you want to be, and then like you act accordingly. And like it's I think like going into anything, it's always going to be intimidating, but it's like, why not? Why can't I do it, right? And so like to have like confidence and belief in yourself, and like I don't know everything, like I make a lot of mistakes, I've been wrong many times, but it's just like having the confidence in yourself to like keep going and believe that like you could get to where you want to go, I would say is one thing. And then the other I would say is like to burn your ships. Like if you're going to go after something, like you have to cut off like all mental sources of retreat. I posted this quote last week from that book actually, and it's this story of some people said it was Cortez, and it was like they copied this story from Cortez, but in the book, for just the sake of like the book itself and the quote, it's about this like I think it was an Asian general that brought his troops over to this island. They get off on the island and they're like super outnumbered, and all the guys are like nervous to go into battle, and the general orders them to go back to the ships and light them all on fire. And he says, okay, well, if you're going to live, you have to win. And so like the idea is just basically like, in order to like ensure that you even have a chance to succeed, you have to like instill a burning desire in yourself to succeed and like cut off all mental sources of retreat. And I mean, I guess this is a little personal, but like that's something that I've tried to do myself. First of all, like I dropped out of college, which was one big thing. And like the longer I get away from when I dropped out, the less likelihood there is that I'm probably going to go back. And then I would say the other thing is like I'm moving, so that's another like example of like I'm trying to do that to myself. I lived in like North Carolina my whole life, and I'm moving to Miami next week. So that's like another example of that. Yeah, I mean, I think like if you're going to go after something, it's like you either fully go after it or like you don't do it. Like those, I guess, are the two like high level, maybe a little corny like takeaways, which I guess don't apply just to Bitcoin. And then I guess like the last thing is like everyone's trying to just figure it out. Like there's a lot of people that you'll meet in the space, and some of them maybe are intimidating to you at first when you meet them because they have a big following, or like you've been listening to them for a long time, and like what you realize is just like everyone is just a person that's trying to figure it out like everybody else. And especially it's like, especially when you go to these in-person things, you see some of your Bitcoin idols in person, and it's like, okay, well, this guy's like, he's a human in flesh just like I am with jeans on. Like, he's not like this, godly figure that you make, on Twitter you kind of like make these like embezzlements of like the characters of these people, almost like they're like a character in a video game or something. But it's cool, like in person you see them and you realize like, yeah, they're just people like everybody else. So like, don't be scared to go after whatever you want to do, whether you're a builder or you just like sharing your ideas and doing research on things. I would just say like, the space is so nascent and so small that, there's plenty of room for, thought leaders and builders and engineers, and there's all kinds of new things that are being built constantly in this space, and it's always evolving. So, don't be scared that, just be confident in yourself and hop in and add value in any way that you can. And like, I guess on top of the fact that like there's opportunity, because the space is so small, everyone is so willing to work with each other. Everyone's willing to share a helping hand. If you have, questions, there's thousands of plebs that'll hop in. If you post on Twitter, like, how do I set up self-custody? There'll be like 50 plebs that will comment on your post, like, some BTC sessions videos about how to set up your cold card. Like, it's a very welcoming community because it is so small. So don't be afraid to hop in there and take advantage of that. Everyone's, very kind in the space.
Yeah, totally agree with all of that. I think that was very well said. Like the burn your ship idea, totally agree. I mean, it's easier said than done, but certainly, you have to be, I guess, kind of all in on life because you're not going to make it out alive anyways. So it makes a lot of sense.
Right. Figure to throw a couple like cheesy inspirational things in there.
Exactly. Well, we do have to wrap it up. Will, where can the audience, obviously find you, but especially find your new firm that you started?
Yeah, for sure. Thanks for having me on, Joe. Maybe we'll do another one in like a month or two. We could like do a little more structure and like maybe have like a certain topic we want to like go in or something. But it was fun to just like have like a lax conversation. It's like rarely you go on a podcast and like, it's like with one of your friends and you can just talk. Sure, yeah. If you want to find us, you can go to reflexivityresearch.com. We have like 6 or 7 example reports, including our year in review report, which was like 40 pages. We covered everything you need to know about the entire digital asset space. Obviously, a huge section about Bitcoin, ETH, DeFi, all the centralized exchange blowups and like some thematic ideas that we're watching for throughout this year. And then you can also check out our core kind of research services offerings, which is made up of we do custom reporting for internal and also external use, as well as our core membership, which involves like 3 to 4 research reports that are sent out from each of our analysts that kind of have their own cadence, specializing in different things. And also, I believe we're the only, or at least one of the few research firms that do weekly analyst calls where you can, get an audio and visual representation and walkthrough of all the reports for the week, as well as ask any questions that you may have for the analyst team. So, very excited about what we're building there. We've been running for 5 months, and I've learned a ton, being part of a startup so far. But I'm very excited for what 2023 has in store. I'm excited to see that Blockware is still doing well, and you're still absolutely crushing it running the research effort. So all the best to you guys, and thanks for having me on, Joe.